All right. I'm Jay Rod, and welcome to Stocks That Rock. June has been a roller coaster ride for the stock market, but we've got a little bit of a budding rally here towards the end of the month. In today's video, however, I'm going to show you over a few charts why I think stocks could remain ice cold through what should be a very hot and sticky July. Okay, so in a typical year, July isn't actually that bad of a month. You see the S&P 500 up 0.05% on average, going all the way back to 1950. But July is actually the weakest month of all the summer months. And in years where the S&P 500 is down 10% or more through June, well, we're looking at a tale of two markets here. The S&P is down almost 0.5% and is positive less than 50% of the time. Okay, so in this chart, you can see the returns by month broken down by year, whether or not the year was up year to date through June, down 0 to 10%, or down greater than 10%. And in years where the market was down 10% or more, or when the market was up, you typically see the S&P sell off. And in years where the market was down 0 to 10%, you see the market rally, which actually isn't all that odd. You can probably chalk that up to investors buying the dip in years where the market hasn't tanked. And if we break down years where the market was down 10% or more year to date, like we are here in 2022, things look even a little bit more grim. You see the S&P 500 here is up in just 3 of 7 years where it was down 10% or more. And if you take a look at high inflation years like 1973 and 1974, those were two of the worst Julys on record when the market was down 10% or more. Okay, so in this chart, you can see the S&P 500's price action broken out by day. And I've gone ahead and split the data into 3 buckets, again, down 10% or more, or up for the year. And on quick glance, you can see when the market is up or down just 0 to 10%. Actually, July isn't that bad, right? You got a nice rally through the middle of the month, a little bit of a pause into a sell-off a little bit in the years where the market was down, but you see the month end strong. On the flip side, you take a look at years where the market was down 10% or more, you typically see a sell-off through the middle of the month, a little bit of a rally, and then a sell-off there towards the end of the month. So the other thing that complicates the S&P 500 in the month of July, outside of being down through June, is that big elephant or donkey in the room known as the midterm elections. Typically speaking, the S&P 500 is weaker during midterm years than it is in non-midterm years. And when the market is down 10% or more, those losses are magnified in midterm years. All right, so here's a look at the S&P 500 average monthly returns in midterm years going all the way back to 1946. I mean, it just looks like garbage, basically from June through September. July, you get a little bit of a bump compared to, say, June or August, but still not very good looking. And you see just from July through September, a pretty mean sell-off. But by October, we typically see the market rip off those September lows through the end of the year. The scariest part of the year in midterm years is actually during the summer. Okay, so in this chart, I've made a composite of the S&P 500 in years where we have midterm years and years that were non-midterm years. And in both types of year, you see during the summer, the market's pretty much flat. But considerably weaker in midterm years, especially through July. You see the worst part of the summer is typically in July here. But we can see, through the sell-off through September, we bottom in October, and we rip higher through the election and into the end of the year in midterm years. So not the worst thing ever when you get to the end of the year. But yeah, the flatness of the summer is just something you can't really ignore in good conscience. Personally, I think we're close to a near-term bottom here in 2022, and that the rally we've seen here at the end of June here for the S&P 500 has some legs given how oversold stocks are. But July can definitely be a rocky road in years where the market has been down through June, but July could absolutely still be ice cold for stocks. When you look historically at markets where the S&P has been down 10% or more through June, and in midterm years, the weakness is just much too strong to ignore. So make sure you're taking precautions. You've got sell stops on your trades if you're a trader, or if you're a long-term investor, you might want to buy these dips, but knowing you're going to have a strong stomach for what could be a volatile month here in July. And as I've been saying all year, the back half of 2022 should be very nice. You saw it here in the charts. Once we get to the election, we should see a nice rally here through the end of the year. So don't give up totally, but definitely watch your back here in July. Well, that's all for today. I want to say thank you so much for watching the video. If you dig the content, please hit the like button and subscribe to the Rich Retirement Letter here on YouTube so you never miss out on my videos. And if you've got a question, comment, or topic for a new video, leave me a comment below this video or shoot me an email at askjrod@stpaulresearch.com. Thanks again. And for Rich Retirement TV, I'm J-Rod, and I'll see you next time.